We have already seen this year that Donald Trump can influence the stock markets. Thanks to his policies, the entire stock market plummeted by as much as 18% at one point. But that's not all. Trump is now proposing to tax European investors more. Specifically, this would involve a higher tax on dividends. And since dividends, together with capital gains, make up our profit from shares, this is quite a significant issue for us investors, as it could reduce our profits. This is one of the biggest tax increases for Europeans that I have seen in the 11 years that I have been investing. Let's take a look. Hi, my name is Andra, and welcome to another investment video. First, let's take a look at how we investors are currently taxed, what taxes we pay on dividends from the U.S. We have three lines. The first is dividends from individual U.S. companies. Then below that, you have a line for dividends from individual stocks if you live in a state that has an international double taxation agreement. And the third line is when you receive dividends from an ETF. For example, you have the ticker VUSA, and you receive a dividend paid to you by the S&P 500 index as a distribution ETF. Let's say you receive $100 in dividends, maybe from Coca-Cola. As a typical foreign investor, you would be taxed 30%, which is the general rule in the U.S. So, out of $100, you would be left with $70 net. Thankfully, most European countries have signed a double taxation agreement. This is the W-8BEN form that you sign when you open an account with an investment app such as XTB. Having this agreement means that foreign dividends are only taxed at 15%, so you get $85 net from $100. That's what most of us have. Yeah, if you look at my dividend statement at XTB, you can clearly see that 15% is deducted from my dividends. If you have purchased an ETF that is distributive and pays dividends, for example, an ETF with the ticker VUSA, which we can look up on just ETF.com, is a distributing ETF on the S&P 500 index, which currently pays a dividend of approximately 1.1%. So, as an investor, you don't pay the dividend directly, but the ETF pays 15% of the dividend anyway. So you get $85 net from a $100 dividend. Trump is now proposing, as part of a new tax bill, to increase taxes on dividends for countries that, according to Trump and the U.S. government, have unfavorable taxes towards the U.S. How would the tax increase for European countries work? Basically, the tax burden would increase by 5 percentage points each year, so in the first year we would see plus 5%, i.e. from 15% to 20%, then another 5% to 25%, then another 5% to 30%, 5% to 30%, and finally plus 5% to 35%, which is the maximum increase Trump wants to achieve, i.e. 20%. For us, this would mean that we would pay 35% tax on dividends after 4 years from the effective date of the law, which is quite a lot, to be honest. To be clear, this law is not yet effective or valid, but it has passed the House of Representatives and is now in the Senate. It is therefore possible that the Senate will amend it or that it will not pass at all. The problem with this new potential taxation is not only that we investors in Europe will pay higher taxes on dividends. The problem also arises because if taxes are increased in this way, European money will become uncertain and will stop flowing to American companies, or at least on the same scale. In the short term, this could mean a slump in U.S. stocks as European investors withdraw their money from U.S. stocks. But that's not all. There's another thing. XTB Big Tech ebook. The second thing this will also mean, and which most of you probably haven't guessed, is a weakening of the U.S. dollar. What does this mean for us? We can see this clearly in Money, which can calculate currency risk. When the dollar weakens, our investments, if we wanted to convert them into Czech korunas, would be worth less, which means we would lose on the exchange rate. For example, we can see on the chart that the dollar is weakening against the koruna this year, so we are currently losing if we wanted to sell U.S. stocks in dollars and convert them into korunas. However, exchange rate and forex movements are unpredictable, so if you are investing for a longer period of time, there is basically nothing you need to do. It slowly evens out over time, and as you buy and sell, sometimes you have a stronger dollar and sometimes a weaker dollar, so you average it out.